Good morning, guys. Welcome to this Thursday, December 11th. 2 more days, we have St. Lucia. I don't know if you know about that holiday. It's a Swedish thing, I guess, but they were a European thing. And then, of course, we have it's kind of 2 weeks to Christmas. I think Christmas is exactly 2 weeks out. So if you haven't freaked out yet, it's time to put the freak on. Things are happening. Again, pretty darn close to holidays. We're looking at Fed announcement yesterday came out pretty much in line what they expected. Powell said a fair amount of good things, a ton of dissent on the Fed board, and long-term yields, bonds are trading up in the overnight. They were mixed yesterday, back and forth a bit, and then they were starting to creep up towards the end of the day. And so far, they're trading up a little bit. So long-term yields coming down. So a mixed reaction. Now, the market in the overnight was absolutely nutcrackers. I mean, it's a technical term. And you can see, I mean, that's, I'm looking at this is your F1. You see, they were all the way down here to the 61, 68.15. This whole thing, the start of we closed up up against the highs. We're looking to buy weakness in the overnight early on, see if they can take it higher. And look at them. They reversed the whole day range from yesterday and then took out the low of yesterday and then some. We're down here at 68.20, 68.15, 68.20 is the support. So these two support I have on the very bottom, the 68.20 and the 68.10s. That's where they were down there. We were almost down here challenging 6,800. That just absolutely happened. I was out and about yesterday, came back in, checked late in the session, late in the evening, checking the charge. And this whole thing was occurring. It's like, man, I missed a massive sellout. It was like straight down. If you watched that early on in the overnight, you would have been super tempted to pop on a short somewhere. That's just for the heck of it. That was just not usually you see an overnight trade like that. So straight back down, and then the London session kicks in, and now they're right back up again. Still at below that 68.70s, but man, they're holding on to that is some crazy action going on in the overnight. So that's digesting the Fed number. That's what that is. Fallout and digestion of what he said. And the news we have for today, though, Thursday, we have international trade and international trading goods and services at 8:30. We have jobless claims at 8:30. Quarterly surveys is coming out as well at 10. The wholesale inventories at 10. So yeah, Nat got support. Yeah, December 11th. I'm looking at it. Yeah, so it's international trade at 8:30 and jobless claims. 10 o'clock we get quarterly services and wholesale inventories. I don't think any of that's going to really be a big deal. They have a 30-year bond auction at 1 as well. That should be interesting to see. See how the bond market really reacts today. So I don't think the news. I think jobless claims is probably the one to pay attention to. See if that comes in as expected. But I think the big thing for today is going to be digesting this Fed number. And we're looking at the overnight. I don't know. Maybe the craziness is in the overnight, and we'll see more of a range-bound day session. But we are right back in the range again. So I thought they had a pretty good shot at taking out that 6,900s and potentially taking it higher. But no, they put a kibosh on that one pretty hard. And we are right now just sitting here in the range we have been in. And I would just say the same thing. Start off range bound. Yesterday I was closing out. I was definitely leaning towards the long side. Right now, given the overnight, I would just say range bound and watch these edges again. Look to sell strength at this point against the 68.70s, against the 68.90s, 6900s. Rotations down. Look to buy weakness against the 68.60s. That would be against this overnight session in the mode of would be the Tuesday's mode. Against the mode of yesterday, 68.50. Against the 68.40, the low of these sessions. The session low from yesterday, 68.30. Low of the overnight, 68.20. And then 68.10. So I would be looking to buy all the way down to those levels. Below 68.10, yeah, start thinking short side of the market. Actually below the 68.30, I would start thinking short side of the market. And still looking to buy against that 20s, the 10s, 6800s, and 67.95 rotations up. But because you're running into pretty good support in the general congestion area. So I may actually put a level there at one point, draw like a longer term congestion level. But I mean, it's pretty obvious to see where it's at. And the other thing is it's an area. It's not like a level. So you have to just pay attention when you start getting down to the 68, 20, and 10s. You start looking at getting into that. If they start trading below, I would say the 67.85, we have solidly taken that out and we are heading lower. So that's kind of the whole range, this whole chunky range we have got there. But I would say look to buy weakness, sell strength for rotations back down again. Watch these upper levels. Right now, if they take out the 6900s, we are well on our way higher. If they are taking out that 68.30 on their way down, I would start thinking short out of the market. Still looking to buy against that 68.20, 68.10s, but just a little bit less aggressively. And I'm not going to try to avoid over trading it or being too aggressive in the trading. Sometimes when things are moving, you get a little bit too excited, but that can have to put a little bit more discipline behind it. So I'm then looking at a couple of shorter term charts just to check it which kind of causes me to do a little bit of that. But even looking at these 3-minute bars, it's easy to get yourself caught up in some action, you know. But if you take but looking at the ES, start off range bound and look to fade these edges fairly equally. We know what to change our mind. On the Nasdaq, you can see also pretty good, almost even crazier there. The up and down, and you can see here we were close. We were up here against it 860s. We closed a little bit and backed off a little bit into the close, but not much. Remember, I was trying to get short on this level. I was expecting a little bit more of a rotation down before the close, and that was not happening at all. So, but in the overnight, you see that's what everything happened. A total like annihilation of yesterday's session. Took out the low of yesterday at 530 all the way down here to the 380s. So really close to that volume edge before they reversed it. And that, I mean, I was looking at that saying, oh boy, this is something. So they're right down here against that volume edge. Not quite at it, just shy of it, but pretty darn close, right? So, and now they're right back up in this upper range again. So we'll see. I mean, today could certainly be a down day. I mean, if they overnight, if this is a bounce off the lows, certainly we could see some selling going into the day session. So I'm watching it. I mean, this is starting off range bound right now, but a day like this, you're looking at digesting the Fed number. If the market is not going to be risk off mode, we may see the day session kick in and starting off a pretty good sell off. So we'll see how that shakes out. But starting off range bound, and then we'll change our mind, change our bias in our minds as the market starts developing. So initially looking to sell strength against the 730s, the 790s up to the 860s for rotations down. And they're all trading at 6.7, 6.8. So not quite, they're taking it out and hesitating there. So I will be a little bit cautious about that level. And looking to buy against support. It has the mode of yesterday here at the 630s. Here you have a prior support area at the 560s against the 530s. Below the 480s, I would start thinking short out of the market. Definitely below 430s, and they start taking out that 380 and the 350s, 40 to 50s here, then bets are off. So this is the volume edge we talk about. That comes out, these two lower support areas, bets are off, we are heading lower. So, I mean, it could go either way. I mean, the fact that they sold off that hard in the overnight got me all spooked, and then the reversal has me puzzled. So, I mean, are we going to be sitting in a range-bound day? Are they going to see this just a bounce off the lows? So it could be pretty crazy. So we'll see how this shakes out. We're still in that tax adjustment period, a couple of beginning of December when they adjust, they take losses, sell non-performing stocks, and rotate back in the tax planning basically. So you're selling, you're buying to realize losses and so on and so forth. So usually by the end of the year like this, you realize losses to take them this year, and then if you have profits, if you want to take those, you take them after the new year so you can delay the taxes a year. That's usually what people do. But at this point, I'm just watching it carefully. I mean, I would like to hope that we're going to see a rally and then we're going to take out the highs and head higher. But given that overnight sell-off and the reversal, it got me a little bit puzzled. So I'm going to just watch it and start off range bound with some caution, fading the edges back to the mean, and then let's see if you see some directional movements. I mean, definitely right now the momentum is to the upside. So if they're starting off the trading day, I would start looking for momentum or moves to the upside, starting with a slight bias to the upside and see if they can push this higher. But looking at the upper edges, they're looking for short setups when they get there. So it's an interesting dynamic for sure. But I think this is all about digesting the Fed number. Finally, looking at the bonds. So bond market also moving pretty good. And as you can see, they are back up here against that 116s. So reverse retesting 116 right against this volume edge right now. So 116, and if they can trade up above it, we'll be back up in that 117 attractor. If not, we can see another move that lower. I haven't gotten to 114 yet. Just they got to a little bit below 115. So I'm still thinking that they may go to that 114. So question is if the bond market right now is just bouncing off the lows, and I would watch that pretty carefully. If the bond market starts trading higher and the yield starts coming down, long-term yields, I think that means that the people like or believe kind of the rate cut and the Fed outlook, what they did. If you see the bond prices start going down and the yields come up, I think there's a lack of trust in what's going on the Fed side. So watch the bond market. It's going to give you a good hint as to what may be happening in the stock market today. So anyway, so that's where I have it. So a little bit of an outlier here down here at the 115s. I'm keeping my level at the 115.60 in the mode of yesterday. So I'm looking to buy weakness early on. It's not super aggressively against the 22s and the 16 to 18s. Last one will be down here at the 12s, but with a lot of caution. If they start trading below that 16 to 18, I would start thinking short side of the market. The pivot is that 115, 10 to 12. If they start trading below that one, we're solid on the short side of this. So watching this, starting with a slight bias to the upside on the bonds, looking for retest of these highs. And then if they take out the 116, we're staying on the long side. If they fail, we start going range bound. And definitely if they start taking out the 115, 10 to 12, we are probably looking at the test of the lows at that point. So very interesting to watch to see how the bond market's going to react to this whole thing. All right, so that's where we are on the bonds. And as I said, I mean, trading the bond market, you had to be a lot of very deliberate. Right now, it looks pretty sloppy, but I'm going to be looking for potential setups and retest failures, and try to be a little bit less aggressive on it. I wasn't that aggressive. Well, I was a little bit aggressive yesterday on it. It's when you want to trade, when you want to trade an edge, you have the option of when the market runs up into it. Get stepping in front of it and then getting super great trade location, but the risk is that you get run over if they are not going to stop at that edge. If you give it a little bit more room and looking for a back off and a retest, you give yourself a little bit more opportunity, a little bit more certainty. I'm going to try to be a little bit less aggressive on stepping in front of it. It is super tempting though, because once you get the good trade location on a good trade like that, it's just great. But you know what? It's levels are levels. The market is going to do what it's going to do. And right now, going today's trading, we have something driving the market, and that's the Fed announcement from yesterday, and the market digesting it. So I would just be a little bit cautious on the edges, and just give myself that little bit extra retest failure setup. Now, if it fails after that, well, then just didn't work. But you give yourself that extra certainty. Alrighty, guys, we'll wrap it there for now, and I will see you back at 11:30. Let's see how crazy this is going to get. Or maybe it just becomes one of these doldrum days. Let's go sideways. But given the overnight, and just I'm thinking that we may have some action in front of us. All right, guys, we'll see you back at 11:30. So good trading, and I'll see you back then.